Okay, one more minute, guys, and we'll kick it off. One more minute just to give a few others some time to get on, but we'll kick it off. Less than 60 seconds here. Okay, and just to do a final check, can you guys hear me and can you see my actual screen?
Yes.
Okay. Okay, so we'll get started. So once again, I thank you guys for joining me. You could have been anywhere in the world, but you're here with me. In the words of Jay-Z, I appreciate that. So what we're actually going to work on today, once again, is really showing you guys how to actually mark up your charts so you can really see those key areas. So you can see the key hit areas in the reversal zones, but also pretty much going to show you guys how to trade solely off price action. And once again, you'll see how the charts line up, that everything makes sense. So can any one of you guys just tell me one, because these are the pairs that I've been trading on throughout the day. So I'm going to do a fresh one for you guys. Can you tell me any pair that you want me to bring up the charts for?
GBP, JPY, GBP, USD.
JPY. Okay, British pound, Japanese yen. Okay, now does everybody have Trader's View? Trader's View accessible?
Yes.
Yep.
Okay. Okay, cool. So I'm not sure if you guys know how to load the charts, but I'll quickly go through this. Now, if you right click anywhere on Trader's View, you'll scroll down, you can see properties. You click properties, this gives you the option where you can pretty much scale and design Trader's View, to your liking. So if you want to take the grid off, you want to change the colors, this is what gives you the option of being able to change the theme and switch from black to white. This is what allows you to pretty much have a toggle on the actual configuration. So the pair that we're actually going to work with today is British pound, Japanese yen. And right now, it's looking like this is trending as a sell, but to get a broader view, I'm going to pull up the actual full day chart or week chart. Okay, so all three time frames pretty much confirm the exact same visual. It's trending as an actual sell, but I'm going to go to the hour, then I'll fluctuate between the time windows when we draw it up. So right now, actually I'll go with the 4 hour. I'm going to draw from the 4 hour. So as you see right now, around 5 a.m., this is where the actual sale pattern started to form, and it's been a consistent sale since then. Now, when you're drawing these actual lines, when you're drawing the trend lines, once again, take the place of a lot of the actual tools. So when I learned this is why I recently stopped using the moving averages, because the trend lines pretty much allow you to draw, and you can confirm the exact direction that the market is going in. And once again, to confirm an actual trend, has to be two connecting wicks. So any formation, as long as there's two connecting intersecting wicks, then that's a confirmation of an actual strong trend. And now what we're also going to do, I'm going to draw the trends in the opposite direction. And for this one, I'll use this one. Draw this for the sale. Okay, and I'm going to draw I'm going to draw a resistance line for the peaking point. So if you guys can see that right here, this is where this price action peaked, and it hasn't met that same threshold since then. So that's going to be your starting point. So now, once again, from here, so now you have your trend lines drawn. So the next step is drawing your support and your resistance lines. And once again, as a confirmation for support and resistance, any 2 to 3 wick formation pattern that is an area of support or resistance. So I'm going to go with the one that we see right here. And I'll draw right there, and I'll do one additional more. Let me see if we can find another one. Okay, I can use these two right here. And here's another formation right there. And another one right here. And another one right here also. Okay, so the lines that I'm drawing, this is your support and your resistance. Now, as you guys already learned from the academy, as soon as the actual candlestick or wick reaches above the actual support or resistance level, that area now becomes either supporters or resistance. So the perfect example, this right here. So this level right here, you see the actual wicks, they attempted to go above, and then of course it didn't fully break and it retraced. If the candlesticks were to breach this resistance level, this would now become support. And it's vice versa for all of the other categories also. So now to make this pop out a little more, I'm gonna highlight these for you guys. And I'm highlighting the zones where you see anytime the wicks hit the actual resistance level, as you see the actual flow of the actual chart, it retraces back into the opposite direction. So this is something else that you guys can look for. Anytime you see 2 or 3 wicks constantly touching a certain area, 9 times out of 10, it's going to retrace back into that opposite direction. And do this right here. And where's another one? Well, no, I'm sorry, not an opposite direction. It's going to continue to flow. So it's going to continue flowing in the direction of the actual trend. So the perfect example, we'll start with this one. This was an uptrend. As you see, these 3 wicks, they actually hit the resistance line, and the market retraced. But once again, this pattern was this pattern is a bull pattern. So it slightly retraced, but is always going to continue with the flow of the actual trade. As you see another confirmation, these 2, they attempted to hit this resistance level, but it didn't make it through. But as you see the candlesticks, they continue to flow on the actual flow of the actual chart. It's the exact same scenario right here. The market started to retrace. Now these are your higher highs and your higher lows. Same scenario. The candlesticks are going to continue to form, but they, as you guys know, you do experience slight retracements in any formation pattern that's continuing to produce. And that's always going to be the exact scenario. Right. Yeah. Who is speaking? Hello, can you hear me? I'm not sure who that was, but can you hear me now? Hello?
We can hear you. I can hear you.
Okay, well, I don't know who that was, but whoever it was, if you just hit me back up. Okay. Okay, now once again, let me delete this. Okay, so when you're ready to add your tools, you basically go to this column right here. Well, first, what you'll do is, where's this thing at? You'll actually right-click anywhere on the actual chart, and you'll scroll down to Drawing Tools, and you'll click Favorite Drawing Tools, and this will give you this little block. It'll expand, and so it just keeps you from having to consistently go back and hit each one if you're trying to mark up or not to try to do something. So to actually add any specific option, you just basically click the little arrow right on the side of it, and you see the little star selection right here. Once you click the star selection, it automatically moves that to your favorite tab, and these are always here. So once again, it's a lot more easier. And I'm going to highlight here. I'm going to highlight the support and resistance line more. And this one. And this one. last two. And this last one. Okay. So now going back to the scenario, so now we're actually viewing the actual decline. So the perfect example right here, as you see, these three wicks, they actually attempted to go past resistance, and they didn't make it through. So the market continued to retrace in the direction that it was going, which is an actual sale. The exact same scenario right here. So basically, the illustrations are showing you this is your confirmations, and this is the exact same example. If you guys have different tools on your actual screen or system now that give you the confirmations, this is the exact same scenario. It's just, as you see, it's not requiring you to have, a bunch of different tools to get, the exact same information. But as you see right here, you see right here, you have the exact same scenario. So this became the resistance line. You see the actual three wicks. They attempted to actually go above it. The market did not do it and continued to go into the exact same direction that it's going in now. So the name of this trading style is solely off price action. And what I mean by that is you're making your decision on your actual market valuation and the actual entry positions solely based on the actual preceding price point for the actual candlesticks. So now and really this is just a visual. So this is really how you guys mark up, the actual charts. Now, once again, drawing a trend line. Once again, this is solely done from one wick to another. So as long as there's two wicks, then, and it's a straight flush, then you have the ability of drawing an intersected trend line, and it's the exact same scenario as well. Two interconnecting wicks. And now drawing your supporting your resistance line, it's the exact same line as you would with, well, actually it's this one. You can do it either or, but this is a lot easier because it covers the entire screen, and you can drag it and it still remains the exact positions. Now, also, a lot of these charts, well, this is new, but a lot of my charts I mark up on Sunday. And those exact same markings and those support and resistance line, they actually will cover you throughout the week as well. So all of these lines right here, these lines are permanent. So as the candlesticks, continue to fluctuate and it trends up and down throughout the week, you'll see those key areas still are very active support and resistance lines. So you don't have to ever, go back and redoctor those in order to still see the exact same visual. So now what I'm going to do is do some trading. And gold, we looking real good with gold right now. So let me set up a new account. Somebody okay? Somebody having a heart attack?
Me. Yeah.
What's going on? Oh, gold. We
That
eating
gold.
good now.
Oh my God. I was in it since this morning. I was negative for hundreds of dollars. I ain't even finna lie. Now I'm positive.
Okay, you said you were negative hundreds of dollars.
Yes.
What lot size are you using to trade?
You know what? I was on the phone and I forgot to close out. I was positive at first, and I got on the phone and forgot to close out before lunchtime, and so I had to I was confident with it going. I knew it was gonna go back up at around this time, so I was confident with it. So I just let it just go ahead and ride on out, and so now I'm straight.
Okay. And once again, this is still with the actual swaps as well. So, this is with the extra points included. So just imagine, if it was, if it was made throughout like just a normal trading day minus the extra spreads, the profit would be more than this. So, if you got in this earlier, it sounds like this is you, Jan, then this is definitely a winner. And let me actually
right now.
see, I'm looking at this right now. You see this is my trend line right here. It's actually still trending. It's actually still trending down. So it's still trending as a bear. So this is just definitely still Rome. So you could let it ride out a little bit more longer. Once again, as you see, these are the only tools that I use now. I use the RSI solely to let me know how far has been overbought or vice versa, how far has been oversold. But I no longer feel the need that I have to have the extra tools because I'm getting the same confirmations from the support and the resistance lines, the wicks that are hitting those support and resistance lines, as well as the actual trend lines that I'm drawing. Now, as not to say that you guys have to duplicate the exact same technique and trading style. Once again, there's no wrong or right way. As you progress, you'll just pick up on things and it'll become a lot more easier, and you'll determine, you don't need to use this to get the exact same information. But give me 1 second. I'm still trying to do another account. Let me go to FinPro. Because this is my live account that I'm trading from. FinPro trading. I'm going to do a fresh demo, then we can go over some actual trades. And I'll mark up the charts and we'll do the trade at the same time. But do you guys have any questions about drawing trend lines and support lines and all of that? And being able to pinpoint those key areas that the actual candlesticks do attempt to breach prior to retracing back to the opposite direction. Demo, leverage. Okay, USD, funds. Okay, MetaTrader demo account.
Hey James, this is Keena. So I'm not familiar with how you draw the trend lines, because that's something that I don't usually do, is mark up my charts.
Okay, so
like explain like your high and low process and
I'll go
and
back.
stuff like that. Yeah.
Okay, so I think Jen gave me this pair. This is British pound, Japanese yen. So now when you're drawing actual trend lines, the trend lines basically two connecting actual wicks flowing in the same direction as the actual trend. And once again, so you see right here, if you can see my screen, I got 1 point at one wick, and I got the remaining point at the wick that's down here. And once again, this is my confirmation of my actual trend line for the actual sale. And it's the same example for an actual buy. You have one wick right here, and then it's tied to an intersecting wick at the top right here. And these two lines, basically, these are support and resistance lines. So just to once again show you how to draw, you can choose any tool, any line tool that works for you. Once again, as long as you're able to draw them, then that's perfectly fine. But to draw them, once again, you're looking for 2 to 3 connecting wicks. And once again, that'll either become your support or your resistance line. So you see right here, we have 3 wicks right here. And as you see, as they attempt to go above the resistance line, the actual market it continues to go in the actual sell market. So each time they attempt to actually test that market in a direction, you see the market continues to retrace. And this is
so I guess my question would be, why did you choose to draw those resistance lines there? Like what are you looking at as far as like drawing your resistance? That very top one, how you went down? Like, okay. How are you picking where you draw your resistance lines at?
Well, in order to draw support and resistance, it has to be 2 to 3 wicks that are attempting to actually break back out. So you see, this was one right here, this was one right here, and this was the third one right here. So based on these 3 candlesticks attempting to break out back into a buy, and once again the market never actually entered and it never completely broke that zone, these lines became resistance, and this right here became support again. So the rule of thumb is, anytime you see the wicks, they are attempting to actually break out, and they don't form fully or cross over into the actual zone, this is an actual strong zone. So it never actually broke that zone. And same scenario right here. You see we got 1 wick, 2, and 3. The candlesticks never fully formed, and it never fully broke into that actual zone. So this was an additional strong resistance line as well. The exact same option.
So do you just? I'm sorry.
Okay.
I'm sorry. So what I'm asking is, when did you draw that? Like, did you wait and go back into history, or?
No. I did this fresh. As soon as we got on the call, I did this. I drew these. So I'll do it. So I think you just got on. So I'm going to actually do a fresh one. I'm actually opening up another demo account.
I'm going to be out there like that, like I was late.
Shut up, Craig. Yeah, I'm going to do a demo account right now. I just got it. So let me log into it from the computer. So I'm going to draw up some fresh pairs then I'll actually go and do the actual trades for them.
Hey, James, can you do a markup on the gold? And also, can someone explain to me what's the difference between a PIP system on gold versus oil? Because they use a different decimal.
Well, I haven't traded oil. I haven't traded oil at all. So I honestly can't say. I have to take a look at it. But the trend pattern right here, so right now this is gold. I actually got into this a little late. I caught gold right here. I caught gold at 2 p.m. right here. So just imagine if this was one of the pairs that I actually marked up on Sunday, I would have attempted to get in right while the actual trend pattern started to form. And for Kina, I can actually show you, I can draw the trend pattern right here. And so that's one, that's another, that's another, and that's another. And then we can also draw the market. This is
So it doesn't really matter if it's going through the wicks. It's still a trend if it's 2 connecting points.
Yeah, as long as there are 2 connecting points, that's always your confirmation for an actual trend in whatever direction that it's going.
Okay.
So for gold has been taking a strong nosedive. Once again, I wish I would have got in. Actually, this was on the 8th, so this is a couple of. So this has been taking a nosedive for about probably a little bit over, probably close to 2 weeks now.
Mm-hmm.
So you see once again, and let me actually draw support and resistance. So this is the top right here. So it's automatic resistance. This is a resistance line right there. Another one right here. Another one right there. Another one right there. And do we have any?
So you wouldn't do just one big trend line, you would break them up?
Yeah, I would break them up. Yeah, I would break them up because this can't be one big trend line because you see it's not flowing directly straight down. The market is retracing.
Okay.
Now, so perfect example, just say if this is AUD USD. So just say if these candlesticks were just flowing, and even if we had even if you had some buys in here where it was still flowing straight down, then you would just be able to draw a straight line down. But in most cases, there's always going to be retracements, there's always going to be additional things going on, and you basically just mark it up based on that. Okay, so the actual trend lines right here. So we see we got 3 wicks right here. Okay, so mark this one. So that's one confirmation area right there. There's 2. We got 3 right here. 4 right there. I could do these, so it really don't make a difference. Okay, so as you guys see, once again, from the illustration, this is again gold, US dollar. You see, starting from the top, when the market actually broke out into a sell, we got 1, 2, 3 wicks attempting to actually break resistance, and it didn't do it. So this is a confirmation that this is a strong resistance line. And once again, the rule of thumb, typically when they do that, if it doesn't break it, the market will automatically continue to retrace in the direction that the trend is going. As you see that right here. Same example again right here. We got 1 wick, 2 wick, 3. This resistance line held. This is another confirmation, strong resistance. The market continued to take a nosedive into a sell. Yeah, slight retracement, which is normal. And again, actually, we had another one right here. So we got 3 wicks attempted, 1, 2, 3. The market started to retrace back into the direction of the original trend. Same example right here. We have retracement to a buy. We got 3 wicks right here. They didn't break the resistance line right here. So this is another confirmation, strong resistance. And as you see from the illustration, it just continues the actual trend. Another scenario right here. It didn't break resistance. This candlestick broke it, but it immediately retraced back into the direction of the original trend. So the confirmations for price action when you draw the actual charts up, once again, for one, it's showing you the direction of the actual trend, and that's clear. But also, normally, if you're not able to get in at the top, then the rule of thumb, you actually don't hop in immediately on the ride down. You actually always wait for a reversal area. And right here, this would have been a good reversal area. And you got in, you wrote it down further. Once again, the market started to reverse. This was the reversal area. You could have got in right here if you missed that entry and roll it down more. Same example, if you missed this entry, you could have caught it right here, rolled it down a couple of pips more. Actually, you could have rolled it down further, so forth and so forth. And I got the account set up. Okay, so file, log in to trading account. Okay, give me 1 second, guys. Where's that email? Send pro. And copy this. Okay, so I'm going to mark up fresh charts, and we're actually going to go and turn those into actual trades. Okay, so shoot me out a pair, or I'll pick a pair.
Hey, what happened? I don't hear nothing no more.
I'm still here. Oh, I think he might not be saying anything. Can you hear me?
Oh, I'm talking. The button is in.
Really?
Okay, so the pair that I chose is Euro British Pound, 4-hour chart. And once again, after you mark it up, you can still toggle between different time windows, and the exact same areas are still there. So the exact same areas are still there. So I'm going to go back to the 4-hour chart. And once again, this will help you guys if you're scalping. So if you 30 minutes, 15 minutes, you see the exact same information is still marked up. Let me go back to the 4-hour. Okay, so now this trend started to create itself going into a bear, but then the market started to consolidate. So when the market consolidates, you can actually draw a trend. This would be resistance also, but you can actually draw a trend line directly over right now. So the rule of thumb, any consolidation period, you guys don't do anything. So that's still correct. So I'm not going to execute a trade, but I'll still mark this up. And so the peak is right here. And this is resistance. And this is another resistance line. Resistance. Another resistance line. Next one. And last but not least. Okay, then once again, confirmations. Got 3 wicks. One right there. Oh, this is the wrong one. Okay, so 3 wicks right there. Yeah, 3 right there. Come on now. There we go. 3 right there. 3 right here. And we got 3 right here. So once again, going back to one as I stated, you're drawing the trend line, just confirming the direction of the actual trend. You're drawing your support and your resistance line, so you're able to see what strong support and resistance lines are still intact. So right here, this was an actual strong support line. As you see, we got the 3 wicks are attempting to actually break it. Neither of that happened, and the market continued into the actual direction of an actual buy. We got an additional support line right here. Same example, we got 3 wicks attempting to breach it. No candlesticks fully formed, so that line held, that trend line held. The market continued to trend in the direction that it's in now. Same scenario right here. This was the actual top of the actual pattern formation. So this automatically becomes the resistance line because the wick, this is the highest point of the actual wick. So we got 3 wicks right here. They attempted to break it, did not do so. The market retraced, and now it's consolidating. Same example for the consolidation as you see right here. We got 3 wicks that are attempting to actually break back out, did not do that. So I would say my best guess, the market would continue to actually trend as an actual sale, but you wouldn't make, and this candlestick is slightly forming, but you wouldn't really make a determination until you actually see, until you get more of a detailed definition. So right now, this would just be on the watch list. I wouldn't make any specific trade movements, but you see the confirmations are lining up. Let me go to another one. Come on now, we gotta find something good. Find something good. What do I have up there already? Okay, can you guys still hear me?
Yeah.
Okay, so I'm gonna go through Australian dollar, Japanese yen. Okay, so we got a good one right here. So again, the highest peak always becomes resistance. And we have that right here. Now also, you can draw the support and resistance line before you do your trends. You can, it's just whatever way you feel comfortable doing so. There's no wrong or right way as long as you draw them. So I got my support and my resistance laid out. And one more. And now I'll draw the actual trend line. Once again, trend line is confirming from one point to another. So once again, we got your confirmations right here. We got 1, 2, we actually got 5 wicks attempting to break out. The market did not allow it. And as you see, it retraced back into the original flow of the actual pattern. So this would actually be a sell. So I'm going to go into it. And once again, if you guys want to get a further look to see how long that pattern could continue to form, you can always go to the longer period chart. So you can go to the week, and viewing it from the week chart, it's showing the market is consolidating. And let me look at the day chart. Once again, it's showing that we're still formulating still good sell opportunity. So that's exactly what we're going to do. Except one, click trading. Okay, and this is an actual sale, and we're actually in profit already. And it's just that easy, guys. Once again, I learned this from Jay Pips. Me and him got cool, and he invited me to a few of his Sunday, you know, as far as on Sunday, he marks up his charts for the actual week. He invited me to a couple of those, and that's really why I picked it up at. That's really where I learned price action at. Once again, you're really just making your decision based on the actual recent close price of the actual pair, also support and resistance. Once again, and then like I said, I just use RSI just to show me how strong the actual trend is going, and if it actually broke into oversold or overbought. That's the only purpose I use that. But solely for trading, this is my new thing, and I've been doing this for about a week and a half and been extremely successful. Haven't had any problems, any concerns. I've actually lost one trade out of 32 trades, and that's because I totally forgot about it, and I left the house and didn't even check it for hours. So I lost one trade based off that, but the strategy hasn't led me. The strategy definitely has not led me awry. Now, do you guys have any questions? Yeah, I know this is sort of kind of, I know for the ones who haven't actually started drawing the chart, this is sort of kind of new. And if you have any questions, I at least want to make it, you know, as easy as it's possible to understand. So if there's any questions.